In this discussion, we will discuss the discussion question of discuss the components of the statement of cash flows. If we see a discussion question like this or essay question like this, we can start out by support accounting instruction by clicking the link below, giving you a free month membership to all of the content on our website, broken out by category, further broken out by course. Each course then organized in a logical, reasonable fashion, making it much more easy to find what you need than can be done on a YouTube page. We also include added resources such as Excel practice problems, PDF files, and more, like QuickBooks backup files when applicable. So once again, click the link below for a free month membership to our website and all the content on it. First, just listing what a statement of cash flows is. Then we can start listing the components. What are the categories of the statement of cash flows? And then possibly get into the details of what will be included in those categories and why, and maybe even examples. So the statement of cash flows is going to be one of our financial statements, along with the balance sheet, the income statement, the statement of equity. Statement of cash flows will be reporting cash flows, the inflows and outflows for cash. Why is that necessary? It's reporting activity over time. The income statement is reporting activity over time, but not on a cash basis. And of course, cash is very important. So the income statement is reporting how we're doing in terms of performance, but not in terms of cash flow. So the cash flow will pick up that information and show us what's happening in terms of cash flow. It's really important, of course, because cash in itself is important, and also cash is going to be involved in every other major cycle within the company. So cash flow, by us knowing the cash flow, we're knowing something that's going to be important to every cycle basically within the company. The major components of the statement of cash flow are going to be cash flows from operating activities, cash flows from investing activities, cash flows from financing activities. And our goal is typically going to be to know which type of activity we're talking about in terms of a statement of cash flow. So when is something going to be operating, financing, or investing with relation to a cash flow statement? Now, the operating activity is the first thing that we want to think about, because that's really the major thing where most of the activity should be. And that's because remember that the cash flow statement is going to be a timing statement. It's something that happened over time. So we're talking about events that happened over time. And that's going to be similar to like the income statement as opposed to the balance sheet. So we're kind of converting the income statement in some ways to a cash basis. And and that's going to be the operating activity that's going to be dealing with that. So the bottom line, in other words, of the cash flows from operations is going to be similar to the bottom line of the income statement. We're kind of like taking net income and having cash provided by operations, which is similar to net income on a cash basis. And that means that most of the activity then that we think about, normal operations, would be on the operating activities. Now there's two methods of the operating activities. We could have the indirect method or the direct method. The indirect method is going to start with net income and kind of reconcile it to cash flows from operations. So it's kind of starting at net income and then converting it to a cash basis, basically net income. And then we have the direct method, which is similar to us taking the income statement and going line by line and reformatting it. So we'll take revenue and we'll convert it to a cash basis and call it, cash from customers. We'll take cost of goods sold and so on, expenses, and convert them to a cash basis, a more of a direct method. Then we have the two other components of the statement of cash flows, and that's going to be the cash flows from investing activities and financing activities. Now, investing cash flows are going to be dealing with, of course, cash flows from investments, things that we typically think of as investments. And I typically think of stocks and bonds as investments. So if we have investments that we're dealing with, of course, then the cash flows, whether they be inflows or outflows related to the investing or selling the investment, would be included. But we also need to think of investments more broadly in terms of investing in like fixed assets, like long-term assets, because those are really a type of investment as well. So when we think about investing activities in the statement of cash flows, we're thinking about investing in basically anything that's long-term on the balance sheet, because that's we've spent cash in order to invest in this long-term activity. So if we're purchasing a long-term activities that we're going to use in order to help generate revenue in the future, property, plant, and equipment, then it's going to be something in the investing activities. And you can think about that in terms of, how do I know if it's operating or investing? If you think of the journal entries related to it, and the journal entry has nothing to do with an income statement account, then it's probably not on the operating. Meaning, if you buy property, plant, and equipment, we're going to debit property, plant, and equipment and credit cash if we bought it for cash. And neither of those items are income statement accounts. They're two balance sheet accounts. Therefore, it's probably not going to be an operating activity, but in this case, an investing activity. So then we have the financing activities, and financing activities typically have to do with us financing the company some way, somehow, getting the money somehow in some way other than normal operations like sales and whatnot, in some way other than selling investments. How would we do that? Typically through liabilities, notes payable, bonds payable, or through owner investments. So if the owner invests company by issuing stock, or by if it's a partnership or a sole proprietor, the owner putting money into the company, that would be a financing activity. Or if we got a loan, financing activity. If we paid back a loan or paid back the owners with dividends or withdrawals to the owners, or we paid back the loan, those would be examples of financing activities. So those are going to be the major components that we would go through. If we had some question like this, we got statement of cash flows, we've got the operating activities, investing activities, and financing activities, and those are just some of the examples of what would be components or parts of those different activities.